Salam everybody, this is Investor Sheikh back at it again with another video. And in today's video, I want to talk about halal stocks and how a company would be deemed halal. So basically, a company that is considered halal is one whose business operates in a way that complies with Sharia law. And this chart better explains this. So when it comes to analyzing a stock, the first thing we want to do is to see whether it passes the Sharia compliance test. And the three factors are: number one, business permissibility. Is this company operating in a way that is halal, in a way that is complying with Sharia standards? Second one is the riba transaction. Are they paying interest on the debt that they have as a company? Now, a lot of companies do have debt, and some of that debt might be high interest. And in Islam, interest is a big no-no. So any companies that are paying excessively in interest is one to watch out for. Whether they have non-Sharia compliant income, meaning income that is coming revenue from stuff that is un-Islamic, like alcohol or pork, as well as interest-bearing debt. And the third factor is the liquidity profile. Is this company hoarding a lot of cash, or are they using their cash in an efficient way? And then once the company passes the Sharia compliance screen, we then need to make sure whether their business fundamentals make them a company worth investing in. Because there are so many companies out there that even those that are Sharia compliant might not be performing well as a company. So that's something to watch out for. So we gotta make sure that the business fundamentals are in place. Do they have a good business model, a good industry outlook? Do they sell products that are resilient? And then the second factor is performance and profitability. Are they generating revenue growth year after year? Are we seeing consistent growth? Are we seeing a return on their assets? Are we seeing their assets increasing every year? And then are we seeing a net profit margin? Is the company operating in a way in which they are at a net positive income every year? And then lastly, the price dynamics, the PE ratio, and then the 200-day moving average. So an ideal company in a halal investor would be one whose companies both pass the Sharia compliance and are performing well in terms of their fundamentals. So the app that I use is the Zoya app. This is an app that I would consider as a guide for somebody who is looking to invest in halal companies. So I'm at the homepage right now, and they give you an overview of some companies to take a look at, and they will tell you whether a company is halal or not, and give an explanation as to why. So I'm scrolling down here, and let's just find a company that is familiar to me. So right here is Royal Dutch Shell. This is a gas company. And this is an oil company, and then you may have seen their gas stations all over the United States and Europe. So this company is Sharia non-compliant according to the Zoya app. So on the Zoya app, when it comes to the compliance status, companies will either be Sharia compliant, questionable, or Sharia non-compliant. So looking at this page here, you see the stock performance, That's the daily performance, and then monthly, 3 months, 6 months, 1 year, and 2 years. So as you can see, the stock has a long-term decline if based on the 2-year horizon. And when you scroll down, you will see news articles that are updated. So the most recent article for Shell is from 6 hours ago. And then on the bottom, you will see some key stats: market cap, dividend, the 52-week high and the low, PE ratio, and earnings per share. So right now I am using the paid version of Zoya, and the difference between the paid and the free version is the full report. With the free version, you will not have access to the full report. So looking at Shell, for their business activity, they do pass according to Zoya's standards. So 99.72% of their revenue is compliant. 0.01 is questionable, and 0.26 is non-compliant. So that's good. Now the issue with this stock is the financials. They are taking on a lot of debts, and a lot of that debt is interest bearing. So on Zoya, they say that companies may take on debt to finance their activities. Debt that generates interest should not exceed 30% of its market cap. And they give the calculations as to how they got those numbers. So they're saying that the debt that Shell has exceeds the market cap. So if that's true, that is not good. And then they also have 37% in interest-bearing securities, which is shown in this equation right here. And then as you scroll down, they do show you some Sharia compliant alternatives. Now, I don't know if these are, yes, they are. They are gas, oil, energy companies. So these are Sharia compliant. So instead of Shell, they would suggest that you take a look at these stocks instead. So as I see here, Chevron, which is another oil company, happens to be Sharia compliant. And the difference here is 99.82% of this revenue is compliant. And they have significantly less debt than Shell, 29.66%, just barely below the threshold of 30%. Barely. And then 3.69% in interest-bearing securities. So that's the oil and gas companies as an example. And if you saw my video last week, I showed you a lot of tech companies, and they all had a questionable compliance status on the Zoya app. An example would be Google. So it is questionable, so let's see why it's questionable. So it appears that 92.69% of its revenue is questionable. So it says here, these revenue segments were flagged because they either fall into a gray area or we were unable to retrieve adequate information. So they don't really go that deep into details. They'll only tell you the largest category of the revenue that is questionable. And it says Google search and other. Perhaps because someone might be able to search inappropriate content through the Google search engine. So that makes up 59.72% of the questionable revenue. But then when you tap on 4 more, they don't tell you the rest because they say that Zoya displays only the largest revenue segment for each compliance category. Refer to the company's 10K for the complete list of revenue segments. So they actually encourage you to check the company's 10K to dive deeper into the financials to see what percent of the revenue goes toward what, whether it is Sharia compliant or not. So they'll give you a more superficial view into this company. But if you want to dive deeper, that is up to you to do the research on your own by reading the 10Ks. So on the bottom, they say that this information is sourced from the 10K. So yes, so this is the homepage, and then you can search for the stocks, and then you can create your own watch list. So all in all, this is a pretty useful app. You may search your favorite stock and find out whether it's halal or not, and then you can figure out why it is that way. Now, this is for those who want to purchase individual stocks, and note that individual stocks tend to carry much more risk. If you're new to investing and you want to have a more secure way of investing, take a look at ETFs. They are a basket of companies that you can purchase. Now, however, with ETFs, you can't really control which stocks are in it, because ETFs tend to have a mix of Sharia compliant and non-compliant stocks. However, there is one ETF that I would suggest. And it is called the SPUS ETF. This is the S&P 500 Sharia Industry Exclusions ETF. Now this ETF contains companies from the S&P 500 that meet Sharia compliance. So the stock price is currently at $25.58. This is a ETF that I would recommend if you are a bit weary in investing in individual stocks due to the higher risk that they have compared to ETFs. Now, all in all, this is the Zoya app. This is the app that I use as a guide to help find which companies I should invest in, whether they meet the halal compliance as well as the business fundamentals. This is Investor Shake. Check out my next video coming up Sunday for the halal stock pick of the week, number 24.